Now, pension scheme providers are being urged to diversify their investments in a bid to revitalize the sector that was negatively impacted by the pandemic. Kenya Pension Fund Investment Consortium says pension providers need to venture into asset classes financed by private equity to realize the competitive, stable returns offered by local investment opportunities as opposed to traditional assets investments.
Your first reaction is typical.
With over 1.4 trillion shillings worth of investment available in the pension fund market, fund managers are appealing to scheme managers to localize investments tailored by private entities in the country.
To increase the activity, the participation of the local market into our own local opportunities so that we can not lock out any foreign investment, but so we can partner and we can co-invest.
Investors argue the various opportunities will multiply individual scheme returns compared to traditional investments.
We're encouraging our clients to basically look beyond the traditional asset classes which have existed, and I think there's a couple of the reasons for that. First of all, to diversify. It's not good to have all your eggs in one basket, and also because the returns offered by some of these alternative asset classes, whether it's private equity, whether it's infrastructure, can actually be higher than we can receive from these more traditional assets.
Kenya Pension Fund Investment Head of Secretariat Ngatia Kirunge underscored the need of migrating to new opportunities, particularly in the infrastructure sector, as the sector provides competitive, stable returns.
So there's private equity, there's infrastructure, there are funds like private debt funds that are looking to take advantage of the opportunities, say in the SME space and the likes.
It's only a matter of time, but it's also up to industry players to also play their part as far as expanding awareness around these technologies is concerned, and of course the cost benefits that come with it.
Sanlam Investments CEO Jonathan Stitchbury says the sector is yet to recover from losses incurred during the pandemic, hence the need to make sustainable investments in the proposed new asset classes.
I'm very pleased that markets have picked up again, and I think that's in anticipation of stronger economic growth, which we're seeing just now, and we also expect going into 2022 as well.
It's a perfect time for the private sector to step in and fill in the gap where government used to be, because these investment opportunities are very lucrative as well.
Juni Karisa Mbele from Malindi, Kilifi County.